Hello everyone, and welcome to the Unanswered Questions True Crime Podcast.
I have spent hours and hours investigating this.
He basically told her that people have been killed. Journalists, independent investigators, people like that disappeared. It frightened her to the bone.
There's more to the story than meets the eye.
There were rumors of torture and homicide and sexual abuse, all sorts of egregious, horrendous crimes.
He was polygraphed 3 times. Each of those 3 showed evasions.
His resumes were a skeleton of truth.
He was mad at the world, and particularly mad at the government.
The study that he commissioned described a fictional terrorist attack.
If people have died over this, it means you're getting close to the truth.
You don't have to be a conspiracy theorist to say, what the fuck?
Hello everyone, and welcome to another episode of my new podcast, Unanswered Questions, where every week we will endeavour to discuss a mysterious unsolved case that has many lingering unanswered questions. So I hope you enjoy, and as always, leave me some feedback on what you think about the show, and rate it as well. Now on to the show. This week we'll be talking about BCCI, the Bank of Credit and Commerce International banking scandal. Now, the Bank of Credit and Commerce International, BCCI, was an international bank founded in 1972 by Agha Hasan Abedi, a Pakistani financier. The bank was registered in Luxembourg with head offices in Karachi and London. A decade after opening, BCCI had over 400 branches in 78 countries and assets in excess of US $20 billion, making it the 7th largest private bank in the world. BCCI came under the scrutiny of financial regulators and intelligence agencies in the 1980s due to concerns that it was poorly regulated. Subsequent investigations revealed that it was involved in massive money laundering and other financial crimes and had illegally gained the controlling interest in a major American bank. BCCI became the focus of a massive regulatory battle in 1991, and on the 5th of July of that year, customs and bank regulators in 7 countries raided and locked down records of its branch offices during Operation Sea Chase. Investigators in the United States and the UK determined that BCCI had been set up deliberately to avoid centralized regulatory review and operated extensively in bank secrecy jurisdictions. Its affairs were extraordinarily complex. Its officers were sophisticated international bankers whose apparent objective was to keep their affairs secret, to commit fraud on a massive scale, and to avoid detection. The liquidators, Deloitte & Touche, filed a lawsuit against the bank's auditors, Pricewaterhouse and Ernst & Young, which was settled for $175 million in 1998. By 2013, Deloitte & Touche claimed to have recovered about 75% of the creditors' lost money. Now we get into the history of the bank. BCCI's founder, Agha Hasan Abedi, established the bank in 1972. Abedi, a prolific banker, had previously set up the United Bank Limited in Pakistan in 1959, sponsored by, and I'm going to butcher this name, Saigols. Preceding the nationalization of the United Bank in 1974, he sought to create a new supranational banking entity. BCCI was created with a capital of which 25% was from the Bank of America, and the remaining 75% from Sheikh, and I'm going to butcher this name, I do apologize, Zayed bin Sultan Al Nahyan, the ruler of Abu Dhabi in the United Arab Emirates. BCCI expanded rapidly in the 1970s, pursuing long-term asset growth over profits, seeking high net worth individuals and regular large deposits. The company itself divided into BCCI Holdings, with the bank under that splitting into BCCI SA Luxembourg and BCCI Overseas Grand Cayman. BCCI also acquired parallel banks through acquisitions, buying the Banco de Commerce y Placements BCP of Geneva in 1976 and creating KIFCO Kuwait International Financing Company, Credit and Finance Corporation Ltd, and a series of Cayman-based companies held together as ICIC, International Credit and Investment Company Overseas, International Credit and Commerce Overseas, etc. Overall, BCCI expanded from 19 branches in 5 countries in 1973 to 27 branches in 1974 and 108 branches by 1976, with assets growing from $200 million to $1.6 billion. This growth caused extensive underlying capital problems. The Guardian alleged that BCCI was using cash from deposits to fund operating expenses rather than making investments. Investigative journalist and author Joseph P. Trento has argued that the bank's transformation was guided by the head of Saudi intelligence with a view to enabling it to finance covert American intelligence operations at a time in the aftermath of Watergate when the American intelligence agencies were defending themselves from investigations by domestic authorities. BCCI entered the African markets in 1979 and Asia in the early 1980s. BCCI was among the first foreign banks awarded a license to operate in the Chinese Shenzhen Special Economic Zone, which bore testament to Agha Hasan Abedi's public relations skills, a feat that had yet to be achieved by the likes of Cito Corp and JP Morgan. Some of China's largest state banks were depositors in BCCI's Shenzhen branch. There was rigid compartmentalization. The 248 managers and general managers reported directly to Abedi, and the CEO, and I'm going to butcher this name, Swali Nakvi. It was structured in such a way that no single country had overall regulatory supervision over it, so as not to hinder potential growth and expansion opportunities. Its two holding companies were based in Luxembourg and the Cayman Islands, two jurisdictions where banking regulation was notoriously weak. It was also not regulated by a country that had a central bank. On several occasions, the Office of the Comptroller of the Currency, a bureau within the US Department of the Treasury, told the Federal Reserve in no uncertain terms that BCCI must not be allowed to buy any American bank because it was poorly regulated. By 1980, BCCI was reported to have assets of over $4 billion, with over 150 branches in 46 countries. Bank of America was bewildered by BCCI and reduced its holdings in 1980, and the company came to be held by a number of groups, with International Credit and Investment Corp ICIC owning 70%. By 1989, ICIC's shareholding was reduced to 11%, with Abu Dhabi groups holding almost 40%. However, large numbers of shares were held by BCCI nominees. In 1982, 15 Middle Eastern investors bought Financial General Bank shares, a large bank holding company headquartered in Washington, D.C. All the investors were BCCI clients, but the Fed received assurances that BCCI would be in no way involved in the management of the company, which was renamed First American Bank Shares. To alleviate regulators' concerns, Clark Clifford, an advisor to 5 presidents, was named First American's chairman. Clifford headed a board composed of himself and several other distinguished American citizens, including former United States Senator Stuart Symington. Sorry if I get that name wrong. In truth, however, BCCI had been involved in the purchase of FGB First American from the beginning. Abedi had been approached about buying it as early as 1977, but by this time BCCI's reputation in the United States was so poor that it could not hope to buy an American bank on its own. As mentioned above, the OCC was adamantly opposed to BCCI being allowed to buy its way into the American banking industry. Rather, it used the First American investors as nominees. Moreover, Clifford's law firm was retained as general counsel and also handled most of BCCI's American legal work. BCCI was also heavily involved in First American personnel matters. The relationship between the two was so close that rumors spread BCCI was the real owner of First American. BCCI also had an unusual annual auditing system. Price Waterhouse were the accountants for BCCI overseas, while Ernst & Young audited BCCI and BCCI Holdings, London and Luxembourg. Other companies such as KIFCO and ICIC were audited by neither. In October 1985, the Bank of England and the Monetary Institute of Luxembourg, Luxembourg's bank regulator, ordered BCCI to change to a single accountant. Alarmed at reported BCCI losses on the commodities of financial markets, Price Waterhouse became the bank's sole accountant in 1987. In 1990, a Price Waterhouse audit of BCCI revealed an unaccountable loss of hundreds of millions of dollars. The bank approached Sheikh Zayed bin Sultan Al Nahyan, who made good the loss in exchange for an increased shareholding of 78%. Much of BCCI's documentation was then transferred to Abu Dhabi. The audit also revealed numerous irregularities. Most seriously, BCCI had made a staggering $1.48 billion worth of loans to its own shareholders who used BCCI stock as collateral. The audit also confirmed what many Americans who watched BCCI long suspected, that BCCI secretly and illegally owned First American. When the Fed cleared the group of Arab investors to buy First American, it did so on the condition that they supplement their personal funds with money borrowed from banks with no connection to BCCI. Contrary to that agreement, several stockholders had borrowed heavily from BCCI. Even more seriously, they pledged their First American stock as collateral. When they failed to make interest payments, BCCI took control of the shares. It was later estimated that in this manner, BCCI had ended up with 60% or more of First American stock. Despite these problems, Price Waterhouse signed BCCI's 1989 annual report, largely due to Zayed's firm commitment to propping up the bank. Abedi was succeeded by Swali Naqvi as the bank's chief, who in the aftermath following controversy over BCCI was replaced by Savar Iqbal Chanduri in the late 1990s. Now we get into BCCI's lending practices. BCCI contended that its growth was fueled by the increasingly large number of deposits by oil-rich states that own stock in the bank as well as by sovereign developing nations. However, this claim failed to mollify the regulators. For example, the Bank of England ordered BCCI to cap its branch network in the United Kingdom at 45 branches. There was a particular concern over BCCI's loan portfolio because of its roots in areas where modern banking was still an alien concept. For instance, a large number of its customers were devout Muslims who believed charging interest on loans, a major pillar of modern banking, was riba or usury. In many third world countries, a person's financial standing did not matter as much as his relationship with his banker. One particularly notable example is the Gokul family, a prominent family of shipping magnates. The three Gokul brothers, Abbas, Mustafa, and Murtaza, were owners of the Gulf Group. I'm sorry if I get any of those names wrong. They had a relationship with Abedi dating back to his days at United Bank. Abedi personally handled their loans with little regard for details such as loan documents or creditworthiness. At one point, BCCI's loans to the Gokul companies were equivalent to US $1.2 billion, 3 times the bank's capital. The case of Nazmu Virani, the UK-based property tycoon, also borrowed £500 million unsecured, which was widely reported. Long-standing banking practice dictates that a bank not lend more than 10% of its capital to a single customer. Now we get into the money laundering violations. In addition to violations of lending laws, BCCI was also accused of opening accounts or laundering money for figures such as, and everyone's going to know a lot of these names, Saddam Hussein, Manuel Noriega, Hassan Mohammed Irshad, and Samuel Doe, and for criminal organizations such as the Medellin cartel and Abu Nidal. Police and intelligence experts nicknamed BCCI the Bank of Crooks and Criminals International for its penchant for catering to customers who dealt in arms, drugs, and hot money. Both Saeed Agha Hasan, born 1960 or 1961, and Amjad Awan, born 1946 or 1947, a Pakistani banker that headed the Panamanian branch of BCCI in the early 1980s, assisted Noriega with Noriega's accounts at BCCI. William Von Raab, a former US Commissioner of Customs, also told the Kerry Committee that the US Central Intelligence Agency held several accounts at BCCI. According to a 1991 article in Time magazine, the National Security Council also had accounts at BCCI, which were used for a variety of covert operations, including transfers of money and weapons during the Iran-Contra affair, which I've covered in my Danny Castellero podcast episode, and I'll also be doing a separate episode that covers that whole case. Now we get into the beginning investigations of BCCI. BCCI's demise began in 1986 when a US customs undercover operation led by Special Agent Robert Mauser infiltrated the bank's private client division at Tampa, Florida, and uncovered their active role soliciting deposits from drug traffickers and money launderers. This 2-year undercover operation concluded in 1988 with a fake wedding that was attended by BCCI officers and drug dealers from around the world, who had established a personal friendship and working relationship with undercover agent Mauser. At the time he was dealing undercover with BCCI executives, Mauser used his undercover operation to establish a relationship with the hierarchy of the Medellin cartel as one of their sources for laundering drug proceeds. Mauser's and others' roles in the sting operation were highlighted in the film The Infiltrator, which was released in 2016. In 1988, the bank was implicated for being the center of a major money laundering scheme. After a 6-month trial, BCCI, under immense pressure from US authorities, pleaded guilty in 1990, but only on the grounds of respondent superior. While federal regulators took no action, Florida regulators forced BCCI to pull out of the state. In 1990, US Senator Orrin Hatch presented an impassioned defense of the bank in a speech on the Senate floor. He and his aide, Michael Pillsbury, were involved in efforts to counter the negative publicity that surrounded the bank, and Hatch solicited the bank to approve a $10 million loan to a close friend, Monzir Hurani. I'm sorry if I get that name wrong. Now we get into the leader and creator of this bank, Agha Hasan Abedi. Agha Hasan Abedi, born the 14th of May 1922 and died on the 5th of August 1995, was a Pakistani banker and convicted felon who founded Bank of Credit and Commerce International, BCCI, and saw its collapse after one of the biggest banking fraud scandals in history was unearthed. Before his death, he was convicted by the United Arab Emirates Court for fraud and was sentenced to 8 years in prison. Abedi also founded United Bank Limited. Abedi underwent a heart transplant operation in 1988 and died of a heart attack on the 5th of August 1995 in Karachi. And now we get into his early life, education and career. Agha Hasan Abedi was born in Lucknow, British India, to a Urdu-speaking, and I'm going to butcher this name, Muhajir middle-class family with members who served as advisors and courtiers to the Nawab of Awada. He received his master's degree in English literature and a law degree from Lucknow University. Abedi migrated to Pakistan after the creation of Pakistan in 1947. Abedi started his career at the age of 24 when he joined Habib Bank Limited. In 1959, Abedi founded the United Bank Limited, UBL. He was the founder and the first president. Under his stewardship, UBL became the second largest bank in Pakistan. Abedi introduced the concept of personalised service and banking support to trade and industry, paying particular attention to the bank's overseas operations. One of the first to comprehend the opportunities offered by the oil boom in the Persian Gulf, Abedi pioneered close economic collaboration in the private sector between Pakistan and the United Arab Emirates, UAE. The UAE President, Sheikh Zayed bin Sultan Al Nahyan, extended his patronage to UBL operations both in Pakistan and abroad. Sorry if I get his name wrong. Now we come to the Bank of Credit and Commerce International. In 1972, Abedi started the Bank of Credit and Commerce International, BCCI, initially with funding of US $2.5 million only. For a decade, it was the fast-growing bank in the world. At its peak, it operated in more than 70 countries and had about 1.3 million depositors. In 1988, he left because of poor health. In July of 1991, it was found by international regulators that the bank was involved in a massive fraud and money laundering for Colombian drug cartels, the Abu Nidal Organization, and Central Intelligence Agency. Subsequently, its assets were seized. Registered in Luxembourg, the BCCI began its operations from a two-room head office in London. It developed into a worldwide banking operation with branches in 72 countries and 16,000 employees. Abedi was personally responsible for inducing a large number of Pakistanis into the field of international banking, and almost 80% of the BCCI's top executive positions at the head office and in branches in various countries were held by Pakistanis. Quote, it was founded by the charismatic Agha Hasan Abedi in 1972, backed by Middle Eastern investors and run mostly by the South Asians. End quote. Abedi severed his connection with BCCI in 1990 after suffering a heart attack and led a retired life in Karachi until his death due to heart failure at Agha Khan University Hospital, Karachi in 1995. Now we get into his philanthropy. The Infaq Foundation has only one office in Karachi, Pakistan. It has capital and reserves of over Rs 2.5 billion, which in 2009 is equivalent to just over US $30 million. Major beneficiaries among the known institutions are, and I'm going to butcher a lot of these names, Sindh Institute of Urology and Transplantation, National Institute of Cardiovascular Diseases, Lady Dufferin Hospital, and Sir Syed University of Engineering and Technology in Karachi, and Ghulam Ishaq Khan Institute of Engineering, Sciences and Technology in Topi, Khyber Pakhtunkhwa, Pakistan. Ghulam Ishaq Khan was the first chairman of the foundation from 1983 to 1995. I apologise if I get any of those names wrong or mispronounce them. I do apologise. Abedi also founded BCCI Fast in 1980 with a donation of Rs 100 million to promote education in computer science. It is now the first multi-campus university of Pakistan, known as National University of Computer and Emerging Sciences. It has 5 campuses situated in Islamabad, Peshawar, Karachi, Lahore, and Faisalabad. Apologise if I get any of those names wrong. Abedi also contributed funds to establish Ghulam Ishaq Khan Institute of Engineering Sciences and Technology. Now we get into his personal life. Hasan Abedi was married to Rabia Abedi. The couple had a daughter named Maha. Although Abedi was born in a Shia Muslim family, he was a well-known Muslim mystic. During his speeches at the meetings of the BCCI Bank, he would spend hours sharing his mystical beliefs. He believed that BCCI was not only a bank, but a God-gifted entity that was directly connected to the universe. Now we get into BCCI's criminality. BCCI's unique criminal structure and elaborate corporate spiderweb, with BCCI's founder Agha Hasan Abedi and his assistant Swali Naqvi in the middle, was an essential component of its spectacular growth and a guarantee of its eventual collapse. The structure was conceived by Abedi and managed by Naqvi for the specific purpose of evading regulation or control by governments. It functioned to frustrate the full understanding of BCCI's operations by anyone. Unlike any ordinary bank, BCCI was from its earliest days made up of multiplying layers of entities related to one another through an impenetrable series of holding companies, affiliates, subsidiaries, banks within banks, insider dealings, and nominee relationships. By fracturing corporate structure, record keeping, regulatory review, and audits, the complex BCCI family of entities created by Abedi was able to evade ordinary legal restrictions on the movement of capital and goods as a matter of daily practice and routine. In creating BCCI as a vehicle fundamentally free of government control, Abedi developed in BCCI an ideal mechanism for facilitating illicit activity by others, including such activity by officials of many of the governments whose laws BCCI was breaking. As one BCCI officer later recalled, Abedi had a saying that expressed his view about law. Quote, "The only laws that are permanent are the laws of nature. Everything else is flexible. We can always work in and around the laws. The laws change." End quote. BCCI would not change to accommodate human laws. On the occasions that such laws actually interfered with BCCI's business, BCCI would, as necessary, change the laws to accommodate BCCI or ignore them entirely. Significantly, at the same time that BCCI created its elaborate corporate structure for the purpose of deceiving and defrauding those outside BCCI, within BCCI, BCCI's various entities were largely disregarded and treated interchangeably, as BCCI's liquidators concluded 1 year after the bank's closure in a report to the bank's creditors committee. In a number of respects, the BCCI group appears to have conducted its affairs as a single entity without clearly identifying which company or entity within the BCCI group was responsible for any particular transaction. As a result, the records of BCCI's criminal activity constitute an accounting and legal nightmare, and a full record of what actually took place is unlikely to be reconstructed. BCCI's multiplicity of locations, layered corporate structure, front companies, front men, its willingness from the top down to falsify information, and its pervasive disregard for the national laws of each country it operated in combined to create a culture of criminality within the bank so massive as to defy investigation. BCCI's records in the United States are fragmentary and incomplete. To the extent that they are organized at all, that organization is in chronological order, document by document, rather than by according to any subject matter, customer account, or transaction. Through fragmentary, these records are also voluminous, amounting to at least 9,000 boxes in New York and Miami alone, and several million pages. Foreign BCCI document repositories of BCCI, especially in the United Kingdom, the Grand Cayman, or Abu Dhabi, are even larger, with access for US investigators limited by foreign bank confidentiality privacy laws and the willingness of the foreign jurisdictions to cooperate. 1 year following the closure of BCCI, federal investigators in the US were still in the process of microfilming BCCI documents from Miami, and liquidators for BCCI in the United Kingdom had indexed 1,600 boxes containing approximately 2.4 million separate BCCI documents, approximately 2.5% of the total of BCCI's documents in the United Kingdom. Adding to the inherent problem of investigating the largest case of organised crime in history, spanning some 72 nations, has been the destruction of BCCI documents and its affiliates by shredding and arson, document backdating and falsification, the removal of most key documents from London to Abu Dhabi in 1990, which I mentioned before, the refusal of authorities in the United Kingdom and in the Grand Caymans to share information with Congress and other US investigators as a consequence of their interpretation of local bank confidentiality and privacy laws, the inability to question Abedi due to his stroke, the inability to question BCCI's other key officials due to their incarceration and segregation in Abu Dhabi by Abu Dhabi officialdom since July 5th of 1991, and BCCI's haphazard method of record keeping. Regardless of what might be shown in the missing material, the remainder is more than accurate to document BCCI's criminality, including fraud by BCCI and BCCI customers involving billions of dollars, money laundering in Europe, Africa, Asia, and the America, BCCI's bribery of officials in most of those locations, its support of terrorism, arms trafficking, and the sale of nuclear technologies, its management of prostitution, its commission and facilitation of income tax evasion and smuggling, and illegal immigration, its illicit illicit purchases of banks and real estate, and a panoply of financial crimes limited only by the imaginations of its officers and customers. Among BCCI's principal mechanisms for committing crimes were shell corporations, bank confidentiality and secrecy havens, layering of corporate structure, frontmen and nominees, back-to-back financial documentation among BCCI-controlled entities, kickbacks and bribes, intimidation of witnesses, and retention of well-placed insiders to discourage governmental action. As Robert Mueller III, the Assistant Attorney General at the Justice Department, at one time in charge of the BCCI investigation, testified to in October of 1991, quote, "BCCI was not an ordinary bank. It was set up deliberately to avoid centralized regulatory review and operated extensively in bank secrecy jurisdictions. Its affairs are extraordinarily complex. Its officers were sophisticated international bankers whose apparent objective was to keep their affairs secret, to commit fraud on a massive scale, and to avoid detection," end quote. In the words of former Senate investigator Jack Blum, quote, "The problem that we are all having in dealing with this bank is that it had 3,000 criminal customers, and every one of those 3,000 criminal customers is a page one story. So if you pick up on one of BCCI's accounts, you could find financing from nuclear weapons, gun runnings, narcotics dealing, and you'll find all manner of means of crime around the world in the records of this bank." However daunting the task of explicating the full extent of BCCI's criminality, it is essential to recognise that at core, BCCI was not a bank which made an adequate return on investment through lending out depositors funds like other banks, but a Ponzi scheme which used new depositors' funds to pay current expenses and to repay earlier depositors, creating a pyramid of mounting obligations that ultimately and inevitably would bring about BCCI's collapse, end quote. As Blum testified, quote, "The people I talked to at the bank would say this was a bank that was very strange because it needed deposits all the time. And if you're running a Ponzi scheme, you need more and more cash in to support the whole system of fraud that you've generated." What it meant was that BCCI people would go out and bribe central bank officials and high government officials to get them to deposit their money and foreign exchange at BCCI. And in exchange for whatever amount of money, suddenly the foreign exchange reserves of a country would be put there and put to use, end quote. From the beginning, BCCI President Abedi conceived of BCCI as a machine with two driving mechanisms, asset and faith. The latter was essential to prevent a day of reckoning when depositors and creditors alike would cause a run on the bank. The former was necessary to sustain the latter through bad times. Together they worked to sustain the illusion that BCCI was solvent, when in fact it is unlikely BCCI was ever solvent. On December 18th of 1991, in an agreement with the Justice Department and New York District Attorney, BCCI's liquidators pled guilty to having engaged in a criminal conspiracy through financial fraud and thereby constituting a racketeering, influenced and corrupt organization, RICO, whose entire assets, legitimate and illegitimate, were subject to confiscation by the government. Specific crimes admitted to by the BCCI's liquidators in the agreement included seeking deposits of drug proceeds and laundering drug money, seeking deposits from persons attempt to evade US income taxes, using straws and nominees to acquire control of US financial institutions, lying to regulators and falsifying regulatory documents, creating false bank records, and engaging in sham transactions to deceive regulators. Thus, the criminality at BCCI was not, as it has sometimes been suggested, a side effect of the bank's enormous growth during the 1970s, an unintended consequence of overly rapid expansion, but inherent in the bank's philosophy of asset expansion from the beginning and pervasive to its closure. While US law enforcement was not able to legally establish BCCI as organised crime until December of 1991, the scope of BCCI's criminality had been clear to both prosecutors and BCCI's defence team at least a year earlier, as BCCI's own private investigators, hired by the bank after its indictment in Tampa for money laundering in October of 1988, told BCCI officials in 1990, quote, "It is the government's view that BCCI is a full-service bank in the worst sense of the phrase. Prosecutors believe that it is official bank policy to actively seek out and market high net worth individuals and to gain from them large and frequent deposits, preferably in cash. They see each marketing efforts as being done at best without regard for the source of the customer's cash, and at worst with tact acceptance or even actual knowledge that in many cases the customer's money is derived from illegal enterprises, most notably narcotics. In the eyes of some prosecutors and investigators, the bank's services are not limited merely to accepting collecting the proceeds of illegal activities. They believe that BCCI officers and employees with express upper management approval also actively assist and even advise their customers on the most effective methods of hiding their money and evading taxes. Money, for example, is seen to be hidden or laundered by the constant, carefully controlled transfer of funds from one account to another within BCCI and its worldwide branches, or between BCCI and other banks related to BCCI, thus making the money almost impossible for US law enforcement to trace. End quote. As an officer of BCCI Canada wrote to law enforcement just 3 days after the closure of BCCI worldwide, even those inside BCCI were often appalled by its practices. We have read with a sense of relief that finally somebody had the guts to investigate into the affairs in the bank. BCCI SA, BCCI Overseas, and BCCI Canada have been for years conducting false accounting practices, concealment of losses, more so to avoid displeasing the Arab owners, and making irregular loans. The latter went on to describe the knowledge of principal officers of BCCI, including its chief executive officer in the Americas, knowledge of money laundering, drug trafficking, loans created in bogus names, and advances of funds to non-existent companies in London, Luxembourg, Cyprus, Malta, the Channel Islands, and other locations. The writer begged investigators to prosecute the big crooks in London and Abu Dhabi. End quote. BCCI Paris branch manager Nazir Chinoy would later admit to investigators that essentially all of BCCI's activity in France was the result of the customer or the bank or both violating somebody's laws. All the money we got at BCCI France, in some way we were breaking the law. If you're taking it with a kickback, you were breaking foreign exchange. All Africans who brought their money got commissions, which meant kickbacks, back-to-back LCs to misrepresent financial deals, taking out less money in a third world country and keeping a share, kickbacks, exchanges, laundering. In some way you're breaking the law in each case. The law breaking was pretty systemic. End quote. Now we get into the scope, types, and techniques of fraud. BCCI's financial empire was built on the fiction that it was heavily capitalized by oil-rich Arab leaders, when the reality was that most of them, and according to some credible information, all of them were acting as nominees, providing either their names to BCCI or their names plus their funds in the form of deposits to BCCI to get a guaranteed no-risk return rather than as actual investors at risk.